All right, everyone. In this video, we're back. We're looking at the charts. We're doing technical analysis. Why do you want to watch this video? Because technical analysis can help you become a better trader, can help you make more profitable trades, especially if you're an options trader. If you are an options trader, you need to know that the number one overriding factor on you being profitable or not is where the stock ends up at expiration or somewhere along the timeline while you're in the trade. Because the stock price has an oversized effect on how the option price performs. So one way to really up your options trading game, even if you're a stock trader, you have to know where the stock may or may not be going. And chart reading / technical analysis is a great way to help the profitability of your trade. So if you want to learn about how to read charts and see what I'm doing, and I'll go over charts, I'll look at individual stocks, we'll look at indexes, we'll see what's been going on in the market, try to help you figure out where stocks may or may not be headed, try to up your game, then stick around. You're going to want to watch this. So let's go. All right, everyone. Lee Lowell here from smartoptionseller.com. I've been in the business for over 30 years now. Doing chart reading, doing technical analysis has really helped my options trading game immensely over those 30 years. So I'm here to help you in that regard, show you the charts, see what I'm seeing, and show you some of the technical indicators that I use, looking at the channels, looking at the trends, all these things that will help you become a better trader. So let's just jump right in as we typically do. Now, what you'll see here on the screen is the actual charts that I look at. I use daily bar charts, and I only have 4 indicators. I have 3 moving averages. I've got a 20-day, 50-day, and 200-day simple moving averages up here on the chart action. Down here is the 14-day RSI. It's an overbought, oversold indicator. It tells us when stocks may be getting overheated or well oversold. And we try to keep it simple, and that's it. That's what I've been doing for a very long time, and it's really helped me out, and I'm sure it's going to help you out too as well. So let's talk about what's been happening in the markets, the U.S. markets here that we look at. As you may or may not know, the debt ceiling crisis in the U.S. has, overtaken the news waves over the last couple weeks / months, whatever. Finally, we had an agreement. The U.S. government had an agreement to raise the debt ceiling. They came to, they figured it out. And that had really been holding the market hostage for the last 2 months or so. And now that that's passed, we can move on and, see brighter days ahead. So let's take a look at how that's been affecting the market. Now we look at the SPY, which is the exchange traded fund for the S&P 500, gives us the best overall view of the market as a whole. As we can see here, okay, so what you see on your screen is about 2 years worth of data here. And each bar here, each line is 1 day's worth of trading. So what are we seeing here? What's been going on in the market? Well, you can see this little triangular pattern right here. Got the blue line here. This is something that I draw. Drawing patterns and looking at trends and drawing channels is one of the best ways that could help you figure out which way the market is headed. Okay, so let's dial it back for a second here. As you know, very early 2022 is when the market went into a downtrend. Okay, basically from January to October, the market and a lot of stocks were in a downtrend. And what you can do to help facilitate, where and how you can see these things is to draw some trend lines, okay? Trend lines are drawn, you connect some of the tops and some of the bottoms, okay? So you can see, and it's not always exact, okay? It's more of an art than a science. We'll tighten this up a little bit. So let's redraw this. So this is what we do, and some manual labor. So you can connect some of the bottoms and the tops, like I said, just to see which way the market is trending. Now, obviously, you can see the market's trending down. And a market or a stock will stay in a certain trend until, something comes along, whether that's earnings results or some kind of government action that pushes it in another direction. You can also see that starting towards the end of October 2022, the market started to move up a little bit. So we kind of have this new channel that we're in for the S&P 500. And in addition to that, we also had this other, this is what's called an ascending triangle right here. So let's remove these, and so we can focus on the triangle right here. This is when you have the higher lows, meaning all the low points are starting to move up. But you have this resistance area right here where the market just couldn't get through for a period of time. And that was right around the 420 area on the S&P 500 or the SPY. So you draw the flat top here and the ascending edge here. It's called an ascending triangle. And once it blasts through the resistance, it should continue on in that direction. So what had been holding the S&P 500 down was this 420 level right here until we had the debt ceiling. An agreement came to. So yesterday, Thursday and Friday this week, so June 1st, June 2nd, right here, Thursday and Friday, we finally blasted through this thing. So I'm in the camp where I think this is going to keep going. I think the bullish action is here. It's going to keep moving. We want to get to try to take out the all-time highs of the S&P 500, which was around, if we look back here, in early 2022, right around 480. Okay, so that's what we're gunning for, right around, close around 428 yesterday on the SPY. And I see this thing moving higher. It's just, we're in a new uptrend here, so we can bring these lines back again. So you want to draw these channels here just to give you an idea of where the market or the stock is headed right now. So the S&P 500 is now in this more of an upwards channel, which tends to mean that it should continue on in that upwards channel for the foreseeable future. You can see now we got the top edge of the channel here. So I think the S&P 500 will start to gun for this upper edge here, which is around $450. I think the next resistance will be right around 430, which is where we were last August. So you need to look into the past to see where there's the last resistance or support. Resistance is areas where the market couldn't get through, and support is areas where the market usually bounces from. So you have to look back. So here we are here. You go back to the next area of resistance, which is right around $430. If it gets through there, then it's going to keep going till the next leg, which is 460 back here, and then ultimately 480. And you can see the channel is sloping upwards, which is good for the bulls. So if you're trying to become a more profitable trader, you want to be able to see these channels, see which way the market or stock is trending, and use these areas to time your trades. You're looking for a catalyst, a higher probability setup to help time your entries and exits as well. So if we were to, at this point, if we wanted to get long, we would probably wait for the market to either fall back to the bottom edge of the channel or to one of the moving averages here. The moving averages also tend to act as magnets at times, and they will trade alongside the moving averages. You can see here's the 50-day right here, and here's the 20-day. We got the blue 20-day and this red 50-day. And if the market is to pull back, it will probably pull back to either the 20-day or 50-day, or at least the bottom edge. But for now, it looks like it's on its way higher. Probably will continue to move higher until it hits this upper edge of the channel. Then it'll probably fall back. So you can see while we were moving downwards in 2022, it just follows in this pattern, and it bounces off the bottom and gets hit off the top. Same thing in this current channel. So we had a little sideways action for a period of time until the debt ceiling was finally, figured out, and now we're probably going to start to move higher till we hit this upper edge of the channel. So if you're bullish, you're taking bullish trades, you've got some momentum here going until maybe some resistance up here. And then you can time your exit if you want to get out at that point. All right. So that's the S&P 500. Let's look at the NASDAQ here. We use the triple Qs, and the NASDAQ's been the strongest of the three major indexes. You got the NASDAQ, the Dow, and the S&P 500. Now the NASDAQ, you can see we had this channel that was drawn from prior. we had the support right around 260, and it's moving towards the upper edge of the channel here. Okay, so we've got probably a little bit more momentum to the upside, but you can see in the RSI down here, we're starting to get sort of towards the upper edge of the overbought area. I have the 80 level set here as the overbought area on the RSI. So the NASDAQ could still move up a little bit more until we get to that extreme overbought area, and that would probably coincide with the upper edge of the channel here. And the NASDAQ highs was still, we had got a little ways to go to hit those, which is also back around December of 2021, early 2022, back up here, just over $400 in the triple Qs. So let's move this over here a little bit so we can see what we're talking about. Let's look at the Dow Jones, represented by the diamonds, the DIA ETF. Okay, so if you want to see what the symbol is up here in the left corner, DIA. All right, so the Dow's been more flat compared to the S&P 500 and the NASDAQ. Let's see if we can extend this line here, and so we know where the resistance is. Okay, so you always want to look to see where the resistance is and where the support is. We also have a line. We can also start to draw, a little bit of an upwards trend here. Okay, just you want to be able to recognize some of these patterns, recognize the trend, which is which way the market or the stock is headed. The Dow a little bit more sideways action. It's got a little bit catching up to do compared to the S&P 500 and the NASDAQ. All right, let's take a look at some individual stocks as we typically do. We're going to start with Apple first because we talk about the more popular stocks because people like to hear about the popular stocks. Now, we've been talking about Apple in the past. You can see we had the W pattern here, which is typically a bullish pattern, but we also had a triple top, a potential triple top, which is more bearish. So we have some bears working against the bulls. The bulls are the W pattern. The bears are the potential triple top, which is 1, 2, 3. Now, we've been discussing, if you've been watching my past videos here, the 175 to 180 area on Apple, it was going to be that battle area. Who was going to win, the bulls or the bears? Now you can see it just popped above the resistance line. This was Friday, yesterday, June 2nd, and Apple finished above this major resistance line. Now you need a little bit more than one day to determine whether it's going to stay above it. So I think next week will be very telling whether Apple's price is going to continue on higher. If we want to get it to take out all-time highs, which is not that far, just in the low 180s here, which was back right in early January 2022. Okay, so we're just about there. So we want to see Apple either consolidate above the resistance line and then move higher. We don't, for the bulls at least, we don't want to see it drop back down and get rejected. So we want to see the bulls continue next week and beyond and take out all and make all-time new highs for Apple. So right here is this is the make or break area, right in these low 180s. So keep an eye on Apple. This will help you, okay? If it starts to look like it's going to stay above the resistance line and you want to get bullish on Apple, that will be a good sign to tell you that the momentum will keep going. If it gets rejected and starts to move lower, you got to hold off on the bullish trades for that period of time. You want to make sure that you're understanding the support and resistance, the channels, and the patterns that are developing that can help you decide when to get in or out of a trade. It can help with that timing. Okay, timing is very critical when you're trading options, especially short-term options. You're trading 1 or 2 week options. Timing is very important. So you want to make sure you understand how to read the charts, how to do this technical analysis. Okay, so let's look at Tesla, another biggie. And Tesla had been in this long downtrend, starting back in November of 2021, and you can just see the channel. Okay, these are the lines that I've drawn. This doesn't come on the chart automatically. You have to draw these lines. So you can see how Tesla was just in this channel. And what we drew recently is with this bull, this is called a bull flag, where you get a big quick up movement and then a slight downtrend that forms the pennant of the flag, and then typically it's bullish pops up through the pennant part. Now, what I said back the last time we were looking at this was that Tesla's got this long downtrending line, but you can see Friday, yesterday, June 2nd, it popped above it. But you can also see that it also popped above the trend lines in the past 1 or 2 days. So we have to see if this one-day action is here to stay or was it a fluke, okay? This is going to be very telling. If Tesla for the next few days can stay above the downtrending resistance line here and start to move higher, then I have to believe Tesla is on a new leg of a bull market. So let's get rid of this line down here and really open this thing up a little bit more, okay? So you can see it traded for 2 days here above it, 2 days here above it, and back here, not much. So we want to see Tesla for a couple more days next week trade above the line and continue higher. If that happens, then I think bullish activity on Tesla is here to stay. If it can't stay up here, it's going to get rejected back down. I don't really see that happening because there's too much optimism now that this debt ceiling limit has been lifted, and now the bulls are ready to get going. So keep an eye on Tesla right here. This is your catalyst. This is your higher probability area. If it can stay above this resistance line for a couple more days, I think it's just going to keep moving higher. It'll probably take out $250, $300 would probably be the next area of resistance because you look back, you got to look backwards. $300 right here in September of 2022 was that next area of resistance. So if Tesla keeps going, look for 300 as your next area to contain it for maybe a short period of time. Okay, so that's Tesla. I want to show you NVIDIA and AMD because NVIDIA, as we know, just was massive last week. Now, NVIDIA was already in this uptrending channel, and then it had its blowout earnings that just blew it up, $100 a share. It just crushed it. So NVIDIA really doing great things. Joined the 1 trillion market cap club for a company. So NVIDIA. Now, if we scroll back here in December of 2021 and all part of 2022, it was in a downtrend. You can see from the channel here. Let me move myself a little bit here. See the channel, and now it started in this new channel, but just powered higher. So NVIDIA's pushing the market higher, which is good if you're bullish on NVIDIA. Let's look at AMD. Same thing. AMD, NVIDIA, they were in this big, massive downtrend for a period of time, and then now we started this new uptrend channel. So you can see how it bounces in between. Here at the Smart Option Seller with our newsletters, we got into a trade right here, a put-sell trade. We sell put options at the Smart Option Seller. You want to try to get into bullish trades as it's coming off a bounce on the bottom edge of the channel. These are your higher probability trades. These are the things you want to look for to help your timing better on, especially options trade. So we got bullish here, which has worked out great for us. Now, it has popped above the channel, which most people would think it would want to fall back in. But in this case, we may be starting a new leg here. If AMD starts to go up again, we may have to, start a new channel here. But you can see that it got very overbought on the RSI, which had its little bit of a pullback from, $130 to below 120. And, it may have to cool off a little bit more, take some more froth out of it, but it may come down to the edge here of the channel and then bounce. So keep an eye on AMD over the next week. It'll probably trade in the high teens for a little bit, coming in contact with the line here, and then it'll probably bounce along with the rest of the bullish market. Now, I want to show you a pattern that I used recently. There's 2 trades. Let's look at, and Micron is also in that category. Now, Micron was a trade that we also used. Now, let's draw the channel with Micron as well. Okay, so we had the channel here, And this is just manual labor that you do. Now, what we also saw was had the ascending, let's get another line here. We had an ascending line and we had the resistance right about here. Okay, let me move these so we can take a closer look here. Now, what we had was this ascending triangle. We had the higher highs and the higher lows. I'm sorry, just the higher lows in this point, and it kept getting rejected right around the 65 level. But once it popped through, it continued to go. So this was a trade that for me personally, was working out. You know, once you see it popping through the resistance and staying there, it should continue to go in that fashion. All right, so that one worked. But I want to show you Kroger as well. Kroger, the supermarket, was showing the same kind of pattern, but this one failed, and this one failed on me that I thought it would keep going. So we have another ascending triangle here. Okay, so I got bullish on Kroger. Let me show you the symbol here, KR for Kroger. I had gotten long bullish right here when it popped through it, and I didn't give it enough. I should have waited another day or two. So even veterans like myself, you know, not every trade's going to work out, but as long as you get out quick enough and cut the losses short, in the long run, you're going to make more money. So Kroger got long as it popped here, immediately turned around and went in the other direction. So I got out on this day here when it finally fell through the bottom edge of the line here and fell through the moving averages. So on this day I got out, took my loss and moved on. And you can see that it was smart for me to get out up here because look how much more it had fallen. Had I waited, I would have lost more money. So you compare this one, this is Kroger, compared to Micron, where the ascending triangle typically will work in your favor. Sometimes it doesn't, but it's better to wait for a day or two to see if it's going to maintain above that resistance line. So for me, I jumped the gun on Kroger. And, some trades work out, but I got out quick enough that it wasn't devastating. All right. So let's see what else we have. Amazon. A lot of these stocks are starting to make their move. Okay. Amazon was in the channel as well. It's starting to power higher. Not completely overbought yet, but, we're probably going to have to start, drawing new lines here. So it was in the channel and then it's starting to blast higher. Same thing with Google. Kind of making the same pattern. Was in the channel. We also this was more of another ascending triangle. We can draw it here, going upwards, had the flat top. This is a pattern that is usually reliable. Okay, so you see the ascending triangle. Once it got through the resistance, there it went, started to blow. So use these patterns to your advantage to help you time your trades, and know when you can keep pressing it because the market keeps going up. What else do we have? Disney. We like to look at Disney. Disney's still a little weak. Coming down to the lows here, we had drawn this other triangle here. This is a congestion triangle where, the market starts to move tighter and tighter on its daily ranges, and then it will typically blast out one direction or another. In this case, it went to the downside. Now let's go to the monthly chart on Disney. If you want to get long Disney, if you think you're bullish on Disney, it's getting close down to the COVID lows right near $80 a share. Okay, so if you want to, take a stab at being bullish on Disney, if that's what you want, maybe wait a little while longer, but it's getting to some real all-time lows here. Even back to back in 2014, 13, $80 is that support area. All right, so let's go back to the daily. We got our daily chart at Disney. All right. Pull this over a little bit here. Okay, so Disney, even on the daily, we can draw a little support line right here, which is in the low 80s. This is the secondary support line here. You can see, let me dial it in a little bit. Okay, so here's that long-term 80 level right here, And then we have this other little support area right here in the low 80s. So you'll see if Disney is something that you want to get bullish on, it's coming down to long time support. Maybe you nibble a little bit, take a little stab, buy a few shares if that's your thing, wait to see if it'll hold, and then see if it starts to move higher. Okay, so let's take a look at some other stocks here. What do we have? Walmart. Anything happening with Walmart? Just, an uptrending line. You can see Walmart's just been moving higher since last summer. You can draw a long support area. Okay, you can even draw a little bit some resistance here. It's not always exact. You can just see that it's in a channel. It's uptrending. So if you're bullish, you want to make sure whatever stock you're looking at or you're about to invest in is uptrending. Let's take a look at Pepsi, okay, because Pepsi's a good, and you can see we had the lines here drawn from long ago. Pepsi is in a nice uptrending channel. You always want to look bottom left to upper right. That's your sign that a stock has been uptrending. Look at this nice channel that Pepsi's been in, got overbought. You can see right up here, coincided with the overbought on the RSI, and it's been knocked back down. Now, Disney, if you want to get bullish on Disney, great company, great dividend paying company. It's starting to get to some very attractive buying area on Disney. Pepsi, excuse me. It may, here's the 200-day moving average down here, and here's the bottom edge of the long-term support. Will it fall even further? It's fallen a decent amount. So maybe you want to nibble here. See if you can catch a little bit of a bottom. If it keeps falling, you can nibble a little bit more. And this would be the real nice area to potentially get in, because look how it's held all these other times. So if you're very conservative, then maybe you wait a little bit longer to see if Pepsi will turn. If not, you can nibble a little bit here. But great company, getting a pullback like this can be a gift. Okay, let's look at Coca-Cola as well. Long time, great company. Sort of, just not really going anywhere. So Coca-Cola as a form of, price appreciation doesn't move that much, but it's a stable, high quality dividend paying stock. We've got a little bit of a pullback here. Look at this, bouncing off the RSI, and look, just perfectly bounced. So maybe Coca-Cola has hit its low and ready to move back higher again. So these are the kind of things you want to look for, these higher probability entries and setups. Okay, and let's see what else we have. Starting to run a little bit long here. Oh, the other thing is that the telecoms, Verizon and AT&T got hit yesterday because word out is that Amazon may be getting ready to offer very cheap or even free calling plans for their Prime customers. And they may be partnering with Verizon and or AT&T or T-Mobile. But regardless, they all got hit. So this is Verizon got hit. AT&T got hit as well. But AT&T getting down to that, $14.50, $15 low, which it really hasn't been through in a long period of time. Let's look at the monthly. Look at this long-term support for AT&T going all the way back to the early 1990s. Okay, so this may be the ultimate support area for AT&T. So use that as a potential opportunity to get long. Okay, you nibble a little bit, because if it falls through, it could keep going all the way down to $10. But if it bounces, then you may have gotten yourself in on the lows there. So keep an eye on AT&T. Let's look at Verizon monthly. Verizon, okay, it's got a possible a little bit more to fall down to the 25 to 30 area on Verizon. But even then, it's lost almost 50% of its value in a short period of time. So keep an eye on Verizon as well. Don't know if Amazon's going to go through with that. So that's what's happening in the telecoms. What else we got going on here? Costco. We had this congestion triangle here. As I said, the ranges get tighter and tighter and tighter until it blows in one direction or another. It looked like it was going to fall to the downside, but got the fake out, and now it's starting to move higher. So keep an eye on Costco. It may continue to move higher from there, getting out of the congestion pattern. McDonald's doing well. I'm trying to see if there's anything. Here's Warren Buffett's Berkshire Hathaway. Doing okay, little sideways action, not much to tell there. Let's see, Clorox, nothing. We looked at some of these. Some of the healthcare stocks are getting beat up a little bit. Let's take a closer look. This is Johnson & Johnson. Let's look at Merck. Merck doing okay. Pfizer's getting down to the lows here. You know, keep an eye on Pfizer, bouncing off some of the oversold on the RSI. Bristol Myers, anything happening there? Also getting down to some lows here, recent lows, I should say. Keep an eye on the healthcare stocks if you like those. I think that's about it. How about Nike? Yeah, let's take a quick look at Nike. One of the best brands on the planet. Getting hit here. Okay, look at this little down move here. Has fallen below the 200-day moving average, but has gotten oversold on the RSI. Could this be the bottom for Nike? Let's take a look at the long-term chart here. Go out to the monthly, long-term. Okay, so a little bit above $80 would be a really long-term, but I don't know if it's gonna if it can get all the way down there. Nike, keep an eye on that. You know, if you want to get long, nibble a little bit, but I'm not really seeing any pattern yet. It's in a sharp downtrend right here. So you know, it could continue lower for a period of time. Just don't know yet. So nothing happening in Nike at the moment. All right. So that's all for the charts there. Let's go quickly to our website, smartoptionseller.com. If you know us, you know we are option sellers, specifically put option sellers. That's our bread and butter. If you want to learn more about put selling, get our free Put Selling Basics ebook. Teach you all about what it is, why we love put selling so much. Scroll down here, put in your name and email address. We'll send you an email that has a link to download a free copy. If you want to learn a little bit more about what else we do at the Smart Option Seller, go to our services tab. We have 2 newsletters that we run all about put option selling. We also have our one-on-one coaching if you want to get to that next level, if you need some help understanding what options trading is all about. Remember, use the charts. This is what it's all about. Use the charts to help you figure out where a stock may or may not be headed in the near-term future. It will greatly increase your options trading profitability if you understand how to read charts. That's how we do it. And that's why we're still here and we're still moving along slow and steady. All right. So in the video that I'm going to put on the screen here is all about put selling. You can watch that video if you want to learn a little bit more about it as well. All right. Thank you for watching. Give me a thumbs up. Leave me a comment. Send me an email. I love to hear from you. Don't forget to subscribe. Hit that red subscribe button in the bottom right-hand corner. All right, that's all from me today. I hope everyone has a great weekend and a great trading week ahead. This is Lee Lowell signing off.